What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin Cash today. Hit that like button, subscribe if you want to see more content like this. Thank you all for being here. Shout out to the Dragon Riders in the House of the Dragon. Let's get going, you guys. All right, so looking at the chart, and I want to make sure you guys can hear me. Yeah, everything's good. No other sounds coming in. Okay. Looking at the weekly here, we are at a lower phase in the RSI, kind of than we've been at the majority of this bull market, while maintaining a higher low nonetheless, right? We're kind of at the area that it would make sense to find a low based on our current path. If we take our most relative low to high here and look at where we found our low, we actually had a double bottom right off of the 618 golden retracement zone. I don't think we're going lower, but if we were to go lower, that would this kind of behavior would very much advocate for the idea of holding the 786 to 886. So definitely not lower than that low, but I'd be surprised if we went lower at all. Let me fix this real quick. Hold on. Get that there. Oh, all right. Looking at the daily RSI, we are still neutral. Not a whole lot's gone on. We're waiting for a decision, right, either to the upside or the downside. Hoping that it would have came yesterday, but it didn't. So we're just, fingers crossed, hoping for it to come today as well. Let's see. Looking at the 4 hour. 4 hours looking more productive than the daily, but we need to get some follow through, right? We had a little bit of volume coming in, sure, nice, but not enough to send us up. Not enough to send us up and through. We don't need a whole lot of volume, but just something, a little bit of something to get us moving up, and I think it'll come. I think that we will definitely move up. When we get above 376, that's the next area to watch. When we get above there, it's on to prices above $400, and that's why that area is important, because really getting above 400, I think, is actually a very important area, and we're going to have the green light for that once we get above 376. So hopefully this next move up can provide that for us. When we get above 400, then we start talking about 530 to 630 and beyond. When we talk about those numbers, then we start talking about new highs for the cycle. So we're just waiting, being very, very patient. And there's nothing really new to talk about in that sense, right? But I do have some new stuff that I want to talk about, and I've got it brought up in a way that hopefully, is chronological and it makes sense. We're not going to look at that chart because that one's kind of pointless, but I've got a few different Bitcoin Cash charts here. This one, it's in log. This is the EMA ribbon. On every account on TradingView, you have this template. It's a default template, MA exponential ribbon. But if you don't have the premium, they won't let you have all of these indicators because it comes with volume and it comes with the lines, right? So each one's like one indicator, so it won't let you do that. But this is what it looks like, at least on a 4 hour time frame, looking like we're about to get across, which I think would be nice, right? Again, kind of lining up with the idea that the 4 hour is bullish here and would suggest that we need to go up. We need to do it. Well, this chart kind of also promotes that idea, which I like. For those of you that don't know what the ribbon is, it's just a bunch of different exponential moving averages. I don't really know the difference in an exponential moving average and a simple moving average. I'm sure it's like trivial. I bet you could look it up if you want, but it's just a different formula. Like it's a different formula for these ones. I don't know the difference, but either way, EMAs, to my knowledge, they move faster, if that makes any sense. And they don't move slower. I don't know how else to put it, but again, I don't really know too much about them. Maybe I should look into them if I'm going to use this more often. But and I do use them. I have used them before. I've used this many a time, but I couldn't tell you the formal definition of an EMA versus a SMA. But anyways, the ribbon is a 20 to a 55, right? 20, 25, 30, all in between to 55 in segments or increments of 5 on these EMAs. There's a bunch of different EMAs there. When it's flipped up, when the yellow line is above all the rest of them, times are good. It's in a kind of bullish formation. When you get the bearish cross below the red here, that is not a death cross, but it is a cross in the ribbon. And that's bad times. That's when the bad times rolled. Whenever this EMA ribbon unfurls, when it gets like thick like this, that's nice. That shows strength. That helps, provide higher prices. When it's thin like this, to the upside or the downside, it's easier to break through, right? And you can see here we were in a bear market, right? We flipped bearish, but we didn't really continue to move down until these lines started to unfurl, until the averages started to come apart, right? And of course, they're going to be together in times of neutrality. Of course, they're going to come apart when you pick a direction, but it's just a way to visualize it, right? Really, it's the price that's allowing these to separate, but it's just a way to kind of conceptualize it, if that helps. On a daily basis, we are below the ribbon. This kind of behavior is actually nice to see. It would suggest that we are going to break through it. Generally speaking, whenever you find resistance right on it just for attempting it and you move down, that's like the kind of normal outcome. But when you live in it for a second, that's when you can expect to extend past it or even get it to flip, which we were hoping to do, but we just didn't get last time. Whenever you contract like this in a ribbon, it normally does this exact move. Just slams you down. Slams you down. If you're contracting, the ribbon hasn't crossed, and you're up above it, then you cross back below it, that is so bad, man. And that just, it slammed us down. Slammed us down. Now, we are finding resistance at the ribbon, coming back down, still finding resistance in this area, crowding it, consolidating it. That's really nice to see because likely we will be getting above it. And the ribbon right now is at 380 at the highest point. So getting above there would be above the 376 level, the 1618, or sorry, the 618 golden ratio zone of this move, I think. Is it this move? Yeah, 376. So getting above this ribbon, which this is what this looks like is going to happen to me, right? We did that last time. We're below it now instead of in it. This is a stronger look for sure, but I do think it would suggest that we'd go above the ribbon, which again, that just would take us above the 618, which would take us potentially above 400, which would then get us rolling on higher numbers, and then la-di-da, we're on to the next phase up, right? So it could all start here, is all I'm trying to say. This could be the consolidation phase that snaps us into brilliance, but I think I've gone over this enough. We can look at the weekly. The weekly is in a bullish formation right now, right? Consolidating, right? Consolidating. And now you're coming back into it. If you close above it, you're probably going to whip in the other direction. On this kind of look, you'd like to see a close above 392 on any given week, 392, and as the weeks go on, it'll get tighter. So really above 390 on any given week, I think would be a bullish as hell indication. Then we look at the monthly. The monthly is bearishly crossed, right? It always has been. This is the all-time history for BCH, in case anybody doesn't know. And I'm sure a lot of you do, but I never know whenever I've got new ears listening, right? We have not just been above the ribbon, but holding above the ribbon. Anytime we wick down, we come back up, we close above it for about a half year now. So the more that we close above this yellow line, the more that the yellow line will move up. The further away we close from it, the faster up it'll move. So definitely it would be a goal to get this month to close green. I think if it were to close green, we would actually, we could do the math. I'm not going to do the math here, but I think I've done it before where if this month were to close above, is it just green or is it like $500 or $600 that would be enough to cross this? I forget. I think it would have to close more than green for this to cross bullishly. But we want this, all to say, whether it's this month or next month or whatever, we want this to cross to the upside. We don't want to close back below the ribbon and get that slam down that we saw on the daily and on the monthly here, right? That's when you contract like this. So it's very important to not close in the ribbon, but especially not below the ribbon. We want to start closing higher, right? Do different things, expect different results. So that's the ribbon. Beat the hell out of that. This is just a simple chart with a bunch of simple moving averages, 20s, 50s, 200s. I can tell you what these are, right? It's just the average closes based on a 20, 50, or 200-day period. The 20 is the yellow line. The green, I don't know. Why is the 200 mute? Why is it? Oh, it's because it didn't exist back here. Okay. Because it's on the week. Okay, that's why it says it doesn't have data. It didn't exist. So it's the average of the 200 weeks, 50 weeks, 20 weeks on a closing period. So the average price compiled, right? The 20 or the 21 is a level that a lot of traders, the 21 and the 50 is a kind of pair that a lot of traders use. Very significant and common averages to look at, right? Very well respected. You can see you're finding support right on the 20. If it was the 21, you'd probably find support on that as well. Resistance right there on the yellow line. Like it looks pretty clean. When you break above it, you're moving up, tilts upwards. It's doing good, right? Fastest moving average. The 50 and the 200. So the 20 and the 50, I feel like I see paired together a lot, or the 21 and the 50. But the 50 and the 200 are a bit of a different dynamic. These are longer term moving averages. And when you get the 50 to cross above the 200, if I could talk and not tie my tongue today, it's called a golden cross when you close the 50 above the 200. So the orange line and the red line, when those interact with each other, it's a very positive or negative thing. And yes, they are interacting with each other right now. And in fact, actually, with 2 weeks ago in mind, it was last week actually. Wow. With last week, the week that the low came in, we actually had a golden cross, you guys. We've got the golden cross. It literally happened last week on a weekly. You guys, this is really bullish. If you don't know what a golden cross is, just go ahead and look it up. But that's what it is essentially, and that generally implies like the beginning of a new trend upwards, right? We've had this once, and it was bullish for a little bit, but not that bullish, and then we came down. Hopefully, this is the real deal this time. It's very common when getting these crosses, these significant crosses, to pull back and find support there. One second. Okay, I'm back. Sorry, I had to take care of some business. Anyways, 348 is the current price right now. Golden cross on the weekly. Let's see if it merits any fruit. Let's get back above the 20 at 435, right? That's a goal. As the weeks go on, this line will come down as long as we're below it, right? But getting back above it would help really certify that this cross is legitimate, right? We had the cross here, and we did close above the yellow line, so that still wasn't enough, but that does help to make things look better, right? We had a really weak cycle last cycle, you guys. Oh, wait. This is the bear cycle. It was in May. No, yeah, we had a really weak cycle last time. I think it should have continued on, but anyways, enough of that. Let's look at the daily. Daily had what they call a death cross, okay? And death crosses and golden crosses can have false interactions, right? They can have positive and false interactions, but this is a pretty big deal. Don't let it be confused that it isn't, right? Again, pulling into the cross, very common thing. Death cross, finding resistance at both this yellow line and this orange line. That's kind of what we're being held down by, the 50 and the 20 there. When we get above, it's very likely that we probably pull right up to this 200 daily moving average, right? You can see that we've shown significance on this a bunch of different times. Resistance here, wrestled with it a little bit there. Support, support, support all throughout there. Just above it, support there. Support here, and then just far away from it, right? It's not too many interactions all the time, and here a little bit of disrespect to be completely fair. But we could find resistance on it, or perhaps we get above it and then we find support above it. But that would be definitely a good goal, is to get above all of these daily moving averages. This is just kind of the look. Right now it's not a good look. Pairing that with a good look on the weekly, we've just got kind of contradictions. So technically the weekly is more significant, so that is the ball in the bull's court, but one of these is going to give. One of these is going to prove to be a fake. Is it the daily cross or is it the weekly cross? And I will say, from what I know about moving averages and momentum indicators, they tend to be less accurate in times of stagnation. On a weekly basis, this doesn't really look stagnant to me. On a daily basis, however, this is pretty stagnant behavior right here, right? We're just moving sideways. So this cross happened in that behavior. Sometimes it's less relevant, but I don't know. It depends. If we keep moving down, then I guess that would take us out of this stagnation. So hopefully this is the fake. Hopefully the daily death cross is the fake, not the weekly golden cross, but time will tell. Just important levels to kind of look for again, getting above this yellow line, the 20 weekly moving average, and then getting above the 200 daily moving average, which at this point in time is above like 415. That 420 area really would be important. And as the days go on, because this is a longer term moving average, it still has these high points in mind, that it looks like it will continue to grow. It's not going to grow like a lot, but it is going to continue to grow. So this goal to break through is only going to achieve over time, or increase over time. I don't know why I can't talk today, guys. BCH USD, I've got the next chart here pulled up with a MACD and a stochastic RSI, which I haven't used the stochastics in a long time, but I'm comfortable enough using them, and they're pretty easy to understand. Again, this is another one of those indicators I couldn't necessarily tell you what it means, right? But I know how it operates, or I know how it looks, right? Across down, is first off not a good thing, but a cross down out of the overbought zone, out of these upper limits here, that's when things really get bad, right? Whenever you first get into the oversold zone here and you're having this blue line below the red line, that just kind of signals strength to the downside, and you're probably going to be in it for a long time, right? And obviously it's easy to say that now. What's the word I'm looking for? Like retrospectively. But when you got the cross here and you got up, it wasn't immediate that you moved up, but this was a signal that you would inevitably move up. We had the cross, we got into the overbought zone, and then we got out. That's kind of not good. We'd like to see some extended periods of time up there. But and I feel like it's very uncommon for this thing. It's not like the regular RSI. You don't interact with the 50 and then come back. I mean, like you can, but it's more common to go from one end to the other, and then one end to the other. It's not common to do these little dances in between, right? Or if you do, you still inevitably go from your up to your bottom before going back up again, right? You danced, but you still went down. So calling for an unusual thing, hopefully, is that we don't continue to move down. We don't get a red month and another red month and another red month and continue to go down. Hopefully we do a little dance, but this time, instead of doing the dance to the downside, we do our dance to the upside, get back in the overbought zone, and finally see a run like this, not like this, in the overbought zone. That's a good, I think, goal on the monthly to start crossing up, but we got a little bit of a ways to go before that. Let's look at the weekly. The weekly has crossed up and gotten out, so that's nice. And again, the monthly, just like the regular RSI, the monthly is different. It's kind of different than the weekly and the daily. It has different rules, I would say. The monthly MACD, by the way, is actually looking really good. I do like this momentum indicator here, getting above the zeros. These two oscillators getting above the zeros. You are decaying in momentum right now, and that's okay. Obviously, we're taking a pause, but this next bit of growth, we could experience some bearish divergence to form, and that doesn't mean we have to move down, right? And that it just means that we're getting toward the end of our rope, and it would make sense. This next move up, if it takes us above here, this could be one of our like second to third last highs, right? Second to last high, third to last high, fourth to last high, right? This is your first high in the cycle. That's your second. That's your third. We might only have one or two more to go, or maybe three more to go, right? Like who knows how many we have to go, and it won't take this much time. But enough of that. All that to say, we could form bearish divergence on the MACD when we come back up. We could, and it would still be fine. I think it would still be fine. It would just signal that we're getting toward the end, but we're not at the end. Or perhaps we build momentum and we see this histogram build and continue to grow. It depends on how much we increase, right? Anyways, going to the weekly, MACD does have bullish divergence, I believe. Yes, that is, nope, not technically bullish. Technically bullish convergence. But you are, with your oscillators, holding at this zero area. You're right around there. I would hope and expect that you find support in this area and you start to turn around, get this oscillator to turn, or the histogram to turn green, and start building momentum positively on the weekly. You're at a low point in the price, so it just makes sense to go up. Weekly stochastics also in an area where it would make sense to continue climbing up, not really to go back in it, right? But it could happen, but I wouldn't expect that based on the weekly stochastics. We go to the daily, and I think stochastics are also more reliable on longer terms. Like for me, the RSI itself is more reliable on shorter terms, but the stochastics, I find it more reliable on longer terms. It's still good, even on like the daily and the 4 hour, and even you can use it in shorter term time frames too. But let's see, MACD, bullish convergence. I like, you actually do have bullish. No, you don't. Is it? That is technically bullish divergence on your oscillator, not on the histogram. And a lot of, I've seen this. It's like a new thing, man. This cycle or last cycle, people started doing it where they only look at the histograms. They don't look at the lines, these oscillators here. They'll literally go to their MACD and mute the lines. Like they'll just take those out. Which I don't get, because then you take away the opportunity to see the bullish divergence form in the oscillators versus the price, right? That divergence counts too. It's not just the histograms that show divergence. And when they pair together, it's really nice. When you get that divergence and you cross above, like there's a bunch of different things that go along with it that it's just nice to have. And it looks like a bullish setup right now. It looks like it's about to cross positively. That's nice to see, right? All the right things on the daily. That's what we want to see. A lot of things are suggesting throughout all these charts that we are going to continue to move up. The only one that's kind of not as exciting is this on the daily where we're finding resistance. But if we do move up with what most of these other charts are saying, if we get above, we move up out of this, and get above these moving averages, that would be a positive thing as well, right? And maintaining prices above it. Doesn't mean that we can't go back below them. Hopefully we don't, but that would definitely be a step in the right direction. Again, culminating with everything else here. Yeah, daily MACD looks good. Daily stochastics look good, looking like they want to reach up and continue to grow. That's good. Both your momentum indicators are suggesting that you want to go higher. I was going to pull up the Heikin-Ashi, but I don't really think it's worth looking at, right? Monthly. We're in a period that would kind of make sense to turn around, but who knows, right? Red, weekly, red, but neutral kind of at the bottom here. Whenever you see it going red, solid, and then green, that kind of is at a point where you would expect it to turn around, right? Like green turned red. That wasn't like the continuation of red that we saw immediately. We had a green week afterwards, but that did signal, that should have signaled that we might see some downside, right? And then when we got our green, that should signal the downside was over. It wasn't the last of our red weeks, but anyways, Heikin-Ashi is a different kind of thing, and I didn't find anything really useful on it other than significant red mounts. We've had green. We're probably due for some kind of green trend at some point. Hopefully this trend takes us above these highs and we can break the overall trend itself, but time will tell. But again, I didn't really, I'm going over it now. I didn't really find any significance. Heikin-Ashi is worthless on smaller time frames. Daily, even on the daily, it's pretty worthless. I'd say the weekly and the monthly is where it most matters, in my opinion, and they're not really looking too significant right now. So waiting on a green cross for these as well, but that will come if all these other things come. So that's all I got, guys. I hope you liked the videos a little bit more in depth. Let me know in the comments how I could do this better, like what you guys would like to see for me to do it better. Is it better to add more indicators? Should I do the same amount of indicators that I do, but just different indicators? Is there maybe it's a good idea, but I should just try to keep it more concise? Maybe get us like I don't know. Leave me some feedback. I'm curious to hear what you guys say, what you have to say in the comments. It is the end of the night for me. This is my last video for the night, so if I'm stumbling over my words, it's because I'm tired. But that's really about it. So yeah, looking forward to feedback. Lay into me, man. Be brutal. Tell me. No, actually, be nice. But I'm open to constructive criticism. Nobody has to tell me something in the comments and then like that's constructive and then apologize for it. I'm very appreciative of constructive criticism. A lot of you guys will be like, hey man, no hate, but how you did this, I didn't like it. But again, no hate, you're great, video is awesome, I appreciate you, I like you, but I think you could do, like, you don't have to explain yourself, just tell me this part sucks, do it better. I will take that for what it is. It's just good advice, right? I love haters for that reason, because whenever they make fun of something that you're doing wrong, well, cool, they're pointing it out. At least they're pointing it out, right? And then you can fix it. You're stubborn if you don't fix it. I don't know. But anyways, let me know what you guys think. I kind of want to do this for more specific videos, right? Whenever I do like individual videos for various stocks or cryptos, do it in this kind of layout, like going through all these things. Are there other indicators that you'd like to see me add? I wanted to throw Bollinger Bands on there and I didn't. I knew I was forgetting something, but I feel like I covered the basis on like most of what I'm comfortable with. And I'm not as comfortable with Bollinger Bands, but I understand how they work. But I'm not going to throw every indicator on here. But and I feel this could be overkill. Like I want to know what you guys think. I trust the Dragon Rider community to give me not positive feedback, not negative feedback, but genuine feedback, and that's what I'm looking for. So anyways, take care, guys. Thank you. See you on the next one. Bye bye.